everybody to our Wednesday webinar. As everybody knows, we do these every Wednesday. The purpose of these is to educate. So again, life is similar to an open book. You just got to know where to go and look. And actually, we didn't edit the first slide. This is series 3, the asset management.
My bad on that one.
All right, so we're going to talk a little bit about who Massive Capital is, our partnering opportunities, and we're going to talk about our GP series asset management versus property management. What are the differences? And then we'll have some time for Q&A. And then afterwards, we always hang out for about 15, 20 minutes where we talk about anything. So this is for educational purposes only. Even though we're going to be presenting, we are presenting what we do, what we believe is happening. This is an educational series. We will talk a little bit about a couple of offerings we have, but the purpose of this call is not to make an offering of any type for investment. So hopefully you learn and enjoy yourselves. All right, this is super exciting. Super exciting. So we have an all-day virtual conference. Okay, so we're talking like 8 in the morning till 8 at night. So you're going to get ready to get your socks blown off. I'm going to be putting a coupon code and a link in the chat in a few minutes for you to be able to come and join. If you join just as a regular admission, it is no charge, but we know that you're going to want to upgrade to VIP. So we're going to put a code in the chat in just a minute, and you'll be able to sign up and save $50, so it'll only be $49. So we really hope that you'll be able to come and join us. All right, this is the Massive Capital extended team. I'm going to call them the extended team from now on. So as we've talked about on a couple of other calls, we're going to be merging with a company called Realty One. So on the left-hand side, you have the normal suspects that you've got to know and love over the last little while, Sharar, Sanjay, and Mike. And then on the Realty One side, running their division is Bo, Pat, and Alexis. And then across the top, you'll see the ones that you're normally dealing with when you're talking to Massive Capital or investor relations team. But clearly we have a much bigger team. We'll talk a little bit more about some of the roles that we have now with this particular merger with this group, but we're getting to be massive. So it's we're coming to live our name. All right, so we are a totally vertically integrated company now. So we have equity, brokerage, property management. Right now, just to be clear, that property management is commercial real estate, not multifamily. We do development, construction. We have an education program, and Brenda will pop in some information about the educational program. And we do a lot of events. So clearly the event on November 3rd is one that's coming up. We have LP equity, which is limited partners, institutional acquisition, leasing. So we have a full in-house leasing team. We have retail flex space, which is different than just retail. Town centers, which are also called lifestyle centers sometimes. We obviously are highly involved in the multifamily space, and we have in-house a general construction group. If you're looking on the map on the right-hand side, you can see, obviously, we're all located in Texas, so we're very Texas focused, but we do have some deals in Georgia, North Carolina, Denver, Colorado, and we have been looking at the Phoenix and the Tampa market. We don't have any projects there at the moment, but it's an area that interests us. All right, so on the left-hand side, you can see all of our activity. So at the very beginning of the year, we closed on a land development deal. Some big news on that. We passed the first city council meeting this week, so it's very exciting. I have a couple of more to go. So very excited for our investors there. We closed on Amberwood in Dallas, Texas. We closed on Warner Robins in Georgia. We did a new development capital raise for X-Space, and hopefully in the next few weeks, we're going to start building that location. We closed on a value add in Denver. We have a couple of retail things that we're working on that are funded, that are new development. We have a value add project right now, which is a 506B coming up. We have a 506C opportunity here in Austin, and we're just finishing a raise for a property in North Carolina. We'll talk a little bit about that. So we have 7 deals under contract down at the debt activity, 4 recourse loans. We have some loans with local regional banks, and our company's strategy is to align with our lenders. So across the top, you can see we're involved in land development, building construction, building operations, and building renovations. So total right now, Massive Capital has 1,346 apartment units. We're also over 100,000 square feet in retail centers. The X space is about 342,000 square feet, and we have just under 1,500 square feet in retail and town center multi-use apartments. And we are squeaking close to that $500 million mark. I never in a million years thought that I would be using the billions. So it's very, very exciting. And a lot of this had to do with the partners that we're merging with. All right, so we want to grow massive. Something happened there. There we are.
Oh.
So as we grow together as a team, so as to say, we have new construction. So these are deals that we're looking at. So we are interested in landowners that want to partner with us for development, so new development. We're in the multifamily space, so we co-sponsor with projects with heavy CapEx, and we can help out there. We're operations, so we co-sponsor on projects and add additional oversight as asset management. So we're going to talk a lot about that tonight. And then on a lot of our deals, we partner with existing GP teams to increase their credit and liquidity and resume so that they can get approved for various loans. And education. So Brenda's going to pop a link into the chat. Brenda's my new pop a link in a chat person, by the way. She's doing awesome. And we have now an education program. So we have a one that we can teach you about raising capital. We have a CRM system that you can use. And we also have what we call our accelerator program. So it's basically bringing people all the way from learning, educating, all the way to becoming a GP in a deal. So it's a really unique environment that we work with our students under analyze deals. They bring deals to the table. We go through everything. It's super exciting. We're doing our first full contract to close with students. It's really exciting to see them manage. It's quite a big thing to be able to manage that whole thing along with the partners giving them the advice. So it's a great learning environment. And these are our 2 projects that are 506C. So they're open for accredited investors. This one, we're super excited, Harris Ridge. It's a new retail development in Austin, Texas. It's about 20 minutes from where I live. I'm super excited. It's in an area that is really getting a lot of development. It has 30,000 people that commute to that little community for work. And right now there are no retail centers. And only 2 were permitted, and we're one of 2. So it gives us a great, great thing. And then obviously everyone knows the market of North Carolina is a great market for multifamily. We have an opportunity there. This one is almost full. So if you're interested, you need to move quickly. And it's a great asset with great local partners. So I'll talk a little bit about the local partners, right? The partnerships. So this partnership with the Harris Ridge, we're doing that with Realty One, the company that we're merging with. And the one in North Carolina, it's with local partners. So what we do is they found the deal. This is the second deal that we're doing with the same team. The first deal's been almost a year and is super successful. So we help them. So what we do is we bring the balance sheet, help sign with the loans, we help raise capital, and then we will back them up on asset management, again, which we're going to talk a little bit about what we do there. So both of these are available. While it says to contact Mike, you can reach out to Jasmine, myself, and Maria, and we're more than happy to help you. I'll put my contact in the chat a little bit later.
Thank you, Trevor.
Yeah.
So
Now
just to add,
put your seatbelts on.
now before I move on, I just we had a call with the permitting department with the Harris Ridge. We got approved, 100% done. The permit, we should have it in about a week or less. Right now, the city manager is going through collecting all the signatures before they give us the permit. So it is coming together nicely. It took R1 or the existing team about 2.5, 3 years to get the title, and we are coming in at the very construction mode. So timing wise, it's a very beautiful timing. On the right side, and I believe the lender gave us the final term sheet, clear to close. Appraisal came out to be same as what we have forecasted on the stabilized, so everything is good to go for that one as well. The good news so far, we're working through the progress. So thank you, team, and everybody else. Back to you, Trevor.
Yeah, so we'll go on to the next slide here. I think we're getting close to the fun part with you anyways. All right, we're at the fun part. Oh, now we're going. Awesome.
All right.
All right. Is this the slide you want to start on?
Yes, so let me share if that's okay.
Yeah.
I have a couple of stuff. Okay, awesome. So
we got a great turnout tonight. Thanks to everybody for coming.
Yeah, appreciate it. Thank you everybody for joining in. And I am sharing my screen. Can you see it?
Yep.
Okay. Cool. All right. So thank you. So this section gets kind of quick. So this recording is available after this call. And if you guys have any questions, then we are going to take them or just pop a note to the I would say the chat, and we'll cover them at the end of the session. So this session, what we're going to talk about, a little bit more academic way, separating out asset management versus property management, and what the classic definition of it, and how we typically see it, and how that plays out early on when someone starts in the apartment domain, and how that separates out as you grow. So hopefully we can give you a framework. Now, objective is also from your end, if you're an LP, use the framework, and then when you analyze the team, test them whether it's working out or not, right? So understanding where the general partnership teams are and how they're growing, and then as an LP you can decide to invest with them. So that's the idea, that we can give you some frameworks so you can analyze us or everybody else in the GP team using those process, separating out asset management and the property management. Then after that I'll get into a little bit more about some of the tools that we use. But most of the focus will be the definition separation, and then we'll focus on the asset management. Okay. Recap from last week. As you guys know, this is our view of the world. The one we take a look at a deal for 5 years from inception to, I would say, the exit. Those are some of the buckets that we see, which is from PSA to due diligence to lending and the debt to the equity investor relations and asset management and education. Last week, we focused on investor relations. What is the typical expectation from an LP once a deal is closed? We shared our view of the world. And as you know, at the end of the day, it's a time commitment. That's what matters. But this week, we'll use the same framework, but we'll go from investor relations to asset management. And in this particular case, we'll talk about two, asset management and property management. Then we'll focus on the asset management a little bit more. Right, so it's a lot, but I'm going to walk you through. I kind of did this, so when you recap the videos, you'll see it. On the right side, that's a classic definition of asset management versus the property management, right? I blocked out this red one. That's because a simple question you can ask is that asset managers are the team or the individual or individuals who is in charge of hiring and firing the property management company. That's a simple way of separating out. So property management manages the property, which is the right-hand side. They're in day-to-day. And whoever is in control of hiring and firing the property management company, they are the asset managers. That's a classic definition, right? At the separation perspective. Then the question becomes, what is the expectation from the asset managers, right? Asset managers here on the first one, they look at the portfolio, they look at the property. They are the property level managers. And underneath the property, we have the property management company, right? So imagine we have two assets, easier to see that way. Someone who's managing both the assets or both the properties and delivering the P&L. and looking ahead 6 months, looking ahead 9 months, looking ahead 3 months, and creating the story and delivering the story that we have and proposed to the investors. They are the asset managers. And then the property managers of the execution. So that's one. Another way you'll take a look at it, if you go by the time perspective, right? If hour by hour, day by day, week by week executions that happen is typically the property managers. That if something goes wrong, who is the first person tenant is reaching out to? That's typically the property managers, right? When property managers get stuck, who they reach out to for guidance, that's the asset managers, right? What it also means is that asset managers got to have a lot of know-how. That's where it's down to here, right? Let's assume we're building a business, right? Whenever we come in, early on when we start the general partner the process on the apartment side, we start typically on the right-hand side. We buy something smaller, and then we kind of get into the weeds of it. We understand how the property managers think, how they behave, and get to know the resources, in the local area. And then we stack multiple projects. Then slowly we grow up from a property manager to the asset manager. So that's the separation, right? Which is the first line. Initially lines will overlap, as most of the syndicators that we have here, they will start as a PM, then they will move into AM role. And early on, the lines are blurry. Over time, lines get separated. And usually it's about $20 million each or so when it starts to be separated, which is someone has two large assets. Just imagine someone has 200 units, 200 units or 200 units. Then they start, the business will drive you to be an asset manager, right? And usually once you have a $30 million or so, I mean, again, that's a ballpark number. I came up with those numbers because at a 30 million, you have 200 to 400 units, depending on where you're at. And at that point in time, you are a manager of operating a business of a $30 million. So you don't have the time to pick up a phone call from the tenant, but you'll be guiding and coaching the property managers, right? So around 30 million-ish or so, will you start to see back office for asset managers. They have processes in place, they have teams in place, and that means if they get sick and if you could take a vacation, systems are running, right? And that's the definition of growing up, right? When we have a portfolio, when we have a business, 20, 30, 40, $50 million or higher, then the general partners get sick, especially the asset manager, as you can know here. The asset managers get sick, they take vacations, but when they go, process has to run, the business has to go, and that's where the back office start to see. So this is one of the questions for LPs when someone says, I have a $500 million portfolio under management or hundreds of million dollars of portfolio under management, and then you go take a look at a team, ask the question, who is the asset manager that is hiring and firing? Then you send them to Hawaii for 6 months and ask the question how you're running the business. Then you'll see the clarification of it. And that's that. And then expectation for the asset managers is very clear that they need to understand P&L. They need to understand balance sheets. They got to have a domain expertise. And that's because they are coming in as a coach or lead to the property management companies, right? Especially on the bigger assets. On the smaller $2, $3, $4, $5 million assets, no problem, we learn it together. But when you get to 10, 20, 30, 40, that know-how becomes clearer and clearer because an asset manager, the title manager, is to manage the property management company. That means we got to know, at least we can be a long-term thinker by adding value to the property management company. When they get stuck, we go somewhere else and find a solution for them. And again, typically they couple with the property managers who are local. They have a lot of resource locally and they ingrain into the local subculture. So the asset manager the property manager must be local. It just must be local. And then asset managers may not be local, right? They don't have to be local, but they have to know the local area. And the local area happens from the ownership and by coupling with the right property manager. So we got to work in tandem as you kind of go, right? So big takeaway from here, always ask the question, who is in control of hiring and firing the property manager? And then do they have a back office or not, depending on the growth? And, and can they provide some kind of a guidance or background that they understand P&L and the finance? It becomes a very good finance play. Unless an asset manager knows balance sheets, accounting, P&L, and P&L from the gross revenue all the way down to bottom of work order and how they tie together, and how that ties together from the forward-looking view versus backward-looking view. They really got to be master of it. Otherwise, that person is learning to be a manager, but it's not a manager yet, right? So go to the next slide. So for us, we'll talk about a little bit more what our team looks like, and because of the next slide, we'll talk about what we do. So here, the sponsor team from the asset management perspective, typically Sanjay and I will look over the asset. We act as asset managers, and Bo runs as asset manager on the retail side. So we have 3 of the 6 partners are really focused on the asset management all the time. Then the question is what I mentioned, what's our back office looks like, which is number 5, right? Number 3. We have Marla, she's the accountant, and so she is the core on the Realty One side. And we have Bhaskar for us as a junior finance manager. So it's a CFO, COO blend. It's a sum of a CFO, but more of a COO, and it's a blend role for the asset managers. So this Marla looks at accounting, looking at the books to make sure that everything is tying up together, and she looks at the world from that perspective. Same with Bhaskar. He's finance, and both of them comes from Fortune 20. He's Fortune 5, she's Fortune 20. Finance, heavy finance background. They grew up purely on the finance, and they understand finance, right? And the processes and how that. So this is our finance team. Then we have, and I believe she is account payable finance. We have 1, 2, 3, 4 finance team full time. All they do finance, and they, went to school for finance, and they're full-time finance. So the time commitment will matter. So they prep us based on what we want to see, and then we provide them the guidance what we want to see, and so we work that system on the channel, and then we get to the property management. So in this case, we shared last week a little bit more about the communication cadence, and I'll tie that up, which is for us when we communicate, or the way we close the month, is workday 10, 15, and 20. Workday means weeks minus the vacation and the weekends. So workday 10, we close the book. So for Bhaskar, he will check with the property management company that we have to make sure that all the apartment books are closed. Then on the workday 15, we'll have a first view. At least this is the high level notes. And workday 20, we have a deck. We reviewed the storyline. We understand what happened last month. We understand what's happening this month. We crafted a qualitative and a quantitative documentation. Then we send it out to our investors, right? And same thing that we expect now. These formats are standard, very similar to FP&A, finance, planning, and appraisal. Or if you guys work in a corporate world, you see the finance. So we follow that model as well. How that goes up to the asset management, to give you more of it, we follow similar pattern, right? And for us, asset management, it's a blend of COO and CFO role. Sorry about the typo, right? And that asset manager, they are the designer of the future forecast using actuals and market data, and they also take that storyline and get the team aligned, which is the property managers, the vendors, and the investors, and then they execute of it, right? And also we always say that depending on the asset size, we also look at the time commit, and that how much of a time that we need to spend on an asset. Typically on a $20 million, a $15 to $20 million assets or more, we need to have at least 20 to 30 hours of time dedicated to that project. Otherwise, it's just tough, right? So back to one of the things for the LPs, you asked the question, we all have 24 hours and we all do multiple projects. The question is how many hours we are committing to manage the asset for the particular project. That's a very good question to ask, right? And then asset managers, they should be thinking independently and putting system and processes independent to the property management software as we grow, right? If I have one asset, I can work at Resben, I can work at Entrata, I can work at Folio, it's fine. But if I have multiple assets, two are using Entrata, one of them are using Resben, then we have Folio, then a asset manager should be able to come in and say, look, I have 3, 4 different sets of data. I have 10 assets. How do I march them together so I can take a look at the data and figure out which way to go, right? And again, the last thing, they are in control of hiring and firing the property management company. So for the LPs, ask those questions the other way around. Who hires and fires? What type of time that they're committing? Whether they have W-2 existing or not, whether they have a back office or not. And then do they, then ask the, if you, first time you met, if they're young coming in, we started at some point. You ask the corporate background to make sure that they understand P&L. One thing that we do understand is that coming from the corporate world, we understand the process. We understand, a version of what needs to get done. The domain expertise matters. Mitigation for that is time commitment, right? Now, going back to Massive, as we are growing, we took a position is that we are growing our asset management arm of it. We leverage the third-party property management arm. We did not get into the property management early on. That's because a couple of things, what we call it, it's the resource availability. What I meant is that hypothetically, I am running an asset and I am the property manager per se. We have the in-house and I'm growing. And if I make a mistake or I become a bad actor, I have to leave the company, then it puts a burden on the project, puts a burden on the company and or on the asset performance. But having a third party, it gives us the flexibility to swap. If I don't like, company ABC and the performance is not working out, we can easily swap it out and go to a company 1, 2, and 3 and replace it. So it gives us much more flexibility to swap out the resources, and availability of the resources become easier rather bringing it in-house. So for now, up until now, we focused on asset management, and over time we still will keep the asset management in place, and we'll partner with third-party property management company, and we'll be a strategic partner, which we are working on the background, but we are not going to bring it in-house as of now. So after putting all together, so the question is, what should you expect when you get into a team or invest in a team that have multiple assets, 4, 5, 6, 7, whatever, right? We have it. Then the question you ask, how do they manage? Here we talked about a little bit more about the theories of definition, and then we give an idea of what the timeline to expect, and then we talked about some other more definition to it. Now the question is the tool, right? Always remember, I feel like asset management to me is when I get sick. If I get a cold, everybody becomes a doctor instantaneously. Then you got to understand who is really the doctor, right? So asset management is like that. Everybody gets it, but not everyone knows it. So just be clear about it, who's running it, right? So for us, we use the tools and the process. Our tool that we do, it's the Power BI. It's a Microsoft tool, and we'll talk about it. What is it? But it's a tool, it's a BI tool that we stitch the data together so we can see what we want to see. And then also gives us the flexibility of the data and the tool and the process. I'll show you a little bit more after this. And the process that we use is the FP&A, the finance planning and appraisal. 5 years of business strategy, 12 months of business plan, quarterly latest estimate, monthly budget. Within the monthly budget, we take a look at it, what the run rate looks like, and then we kind of go. It's a high frequency decision-making process as you kind of go through. On that note, full disclaimer, Massive is 2 years old. It took us a lot to get here. So when we talk about it, it's not, path isn't easy, and it takes a lot to get there, but it is available for anyone who wants to be a general partner, wants to grow. This is a really good tool to have. And then we can automate. I still use Data Shell. Bhaskar used to use Data Shell. We ran billions of dollars of assets in this portfolio. So you brought that in. And finally, we're at a spot that we're able to bring data in for all the assets all together. And I'll show you. And the process is FP&A. So this is an example. And I'll show you a demo after this, just to kind of share what the Power BI looks like. Full disclaimer, this data are for educational purposes only. Those are not actual. That's a fictitious data, and I'll show you what the fictitious mean. The point is, on the left side, if you take a look at it, we have portfolio managers or asset managers. We have assigned finance manager per asset. Then we use aggregated data from various property management softwares to analyze that we do. And we refresh data every week, almost. So in other way, we run independently of the property management company to pull the data directly from the platform that we do. We roll up the data slightly differently than property managers they do. So when we get into a property manager's call, we are prepared to have a discussion there, and because we send them some questions early on. So everything is running. So another way, we don't come into the meeting and then ask a question, hey, what happened last 7 days? Let's take a look at the report. We flipped it. For us, we run the data independently. We ask the questions already that, hey, I already saw that happening. why is it happening, have an explanation, and then you come into the meeting prepared for it. So it's a really meaty discussion heavy meeting. Also, we also have a separate asset managers call. No property management companies. It's just the asset manager to asset manager because we have a lot of partners. So we bring in the partners, and because we give our tools access to our partners, so they take a look while we take a look. Then we have a discussion at the property level. Hey, is it working? Not working? How do we do it? Let's go. What do we need resources? Do we need marketing budgets or capex budgets? That kind of stuff. On the right side, you can see on the top, we brought in data from 2022, 3, and 4 altogether. And those are some of the assets that we have. With the click of a button, I can do a portfolio aggregation. I can do individual assets. I can do individual portfolio. It's right there. And at the bottom right here, those are the different cuts of the data that we use. And again, those data are not provided to us by the property managers. Most of the time, they don't even know. It's us, the one who built it. We are stitching the data together, so we almost have real-time access and reporting when you come in. And the beautiful part is when you come in, you know right away, how that is behaving, right? There's some fictitious data. Give an example. September month, the revenue, the check that we collected was about 800 grand. The expense was 600 grand. And then I have my non-OPEX, so we kind of sort of know which way to go, right? So on that note, I'll show you a little bit more on the real Power BI software. Again, none of those data is right because I kind of played it different way. So here, if you take a look at it, this is how it works, like how simple for us. If you come in and we can click any of the portfolio, we have Warner Robins, we have 2 assets, and Pasadena, we have 2 assets. Then Macon, we have 2 assets. We can go down to portfolio level to the asset level by click of a button. We could see income, OPEX, non-OPEX, and we drill it down. It goes to the broken down. I can go net income up and down all the way pretty easy. And the best part is I don't have to fetch the data. Data is already coming in. Bindi and Bhaskar is already rolling that up, and we already decided which way to go. The same thing here. We can measure what the leases are coming up. Let's say McCollum, it's an asset that we have. I'm giving you some insights. So this is how the lease bonds up coming up and what my leasing trend looks like. So when we asset managers having a conversation, we're saying, look, let's go prepare for next 90 days. Let's go prepare for next 180 days. Is our pro forma, is our updated budget matching with whatever's coming up, right? So look at the February, I have 28 coming up, which is a good thing. Nobody goes out the door on 28. That means they're going to move over to March. Danger zone is summertime. So let's have as little as we can in summertime, push it back during the other times of the year. Then we also look at the work orders. Give an example. We have, let's say we can go up and down Stonegate. We have 2, and we say, hey, in our portfolio between 2 assets, how many work orders do we have? A little over 1,000. Hey, let's go drill down one more. What does it look like, right? And then we can say, hey, let's look at how many emergency work orders that we have. Not a whole lot, right? 1 open and 1 open. So we can track the work order opening time and closing time. That tells typically the control of the property management company within the asset. Less we have, better it is. And the faster we close, better it is. And also we can track the marketing. Right, it tells us how many weeks we own it, what leads comes in, when that course happens. So all those things come into the play. So the point is, as an LP, you don't see this, but asking those questions, going back to the deck, is that does the team have all the system and a process in place so when things are running at a continuous basis, especially when the individual taking a vacation, when the individual is going that, right? And for us, we're seeing more and more that time commitment matters. If I have a W-2, I committed 50 hours to somewhere else. And if I want to buy $100 million asset, I'm out of time, right? But especially when that time like this happens, time commitment is much more needed. So as an LP, as a GP, we also test that to make sure that you have time. And then we find a way to kind of balance it out. And if you're an LP, we always say, ask the question. Send that person who's running the asset to 6 months in Hawaii and see if the bus is still running. Then you can tell what the system and the process will look like. That was a lot. So Trevor, I'll give back to you. And then I'll talk.
I'm ready to go to Hawaii.
I don't know, it's fun. It is fun. It is getting mission critical. Going back, it's so many deals that we do. Look, multifamily is great and dandy when market gives it to you. When market turns, we gotta put in the time, and then we gotta know how to run the asset. Calling the property managers every single day, how many leads coming through, doesn't do any good. It just generates the property managers. But talking to the property managers, understanding leads not coming, then you go figure out what the lead flow looks like. Then we go figure out is there any third-party entity can do a specialized marketing. Then we bring them in, have a discussion to give them a solution is better. That's where the management kicks in, not just the calling and staying on top of that. Because those guys and our property managers, they're day in, day out, and they're stuck. I mean, that's why it's not working. Like calling them 10 times, it's not doesn't work, right? So management is different than I call you, I follow up. The follow up, it's execution, management is know-how. That's where I kind of come together, right? Cool. So I'll stop sharing and then I'll take some questions from there. Yes, then we go from there.
Yeah, so I don't know if we're doing this at the multifamily conference. I don't think it's one of our topics, but this webinar is recorded and uploaded to our YouTube channel. I put that in. I don't think we have an asset management section.
We have a section for tools and AI, the tools that we use, tools that we see on the market, tools that we used to use, but we don't use anymore. So we'll give you a pulse of a toolkit. I think at the second half of the conference, we have it. So we'll talk about all the tools available for anyone to get started from, I would say, less than 150 units to more than 150 units and some of the cool things that you can do to accelerate, right? Data is important. Managing the data is more important. Understanding what we can do with it, then go back and design the data set coming in. That is extremely important, right? So yes, we don't have asset management particularly, but we have the tool set and it's all there. So please sign up and you'll see it. Okay, so let me take some questions. Now it's a lot, right? Asset management becomes very tricky. So please drop a question. I'm more than happy to take it from here. Okay, so I have a question. I'm a floater property manager who is in the creative finance real estate. Okay, sounds good.
There was a question about people on the payroll and
Where's the question? Sorry, I don't see it. Okay, how many of the team members? More than 2/3. So I would share. That's a good point. I should share the screen. So cool. Folks on the left side, not salaried. They all get paid for performance. And then on the top line, we have the investor relation team. It's a deal by deal basis. Everybody else is paid their salary. So their full staff, they're all salary. Our finance team are salaried, and Grant, it's a in-house capital market. So since our business plan is to buy $250 million worth of asset next year, and that's a lot of lending. So he's our in-house capital management to manage that, but he gets commission just like that broker, all salary here, and they are all commission-based realtors that we have. So Chris, Daryl, Letitia, and Erica, we have one person, Eric, he joined. All 5 of them, they are full-time leasing agents for the triple net asset, and they get paid from there. So except for everybody, it's on salary basis from us. Very good question. So yes, we are building an organization, or R1 is 42 years old. We are 2 years old. But we're moving towards that model.
and feel free to unmute yourself or put it in the chat. More questions, the more interesting this is.
Oh yes. And I can talk about a little bit more as you kind of go through. So I'll give you a case study here. Let's see. Okay. So we have an asset. Let's see what we have. Oh, so that's a good question. We're here once they reach out to any of the investor relations team and drop them a note chat, then we talk a lot and we hang out. So I'll give an example on the asset management. How does that work and early on, right? So this is the older data set I brought in for demo purposes only. It's not refreshed yet, but I'll show you a little bit more on this side, right? So McCallum is one of the assets that we took on, and we went through property manager, a property management company twice. Third one is settled. And then we high graded the property management company. We high graded the managers that are focusing on that. So we stabilized from that part of it, but then they were stuck. We're at about 85, 86% economic occupancy, and they were just stuck, and we could not figure that out. So, but the interesting part is when we brought that in here, what we saw, those are how many tours that we had, not the leads. We have another one that shows the leads, but this one tells us how many tours that we have in a weekly basis, 20, 30, 40, 50 of those, as you can see. But then if we take a look at it here, the application wasn't there, right? Then the question become, what was the issue? We have 20s right here. I don't have a single digit application. And once we took a look at it, then we asked the question, what days of the month the tour shows up, right? And where is the tours that showing up? Then we saw that certain website is sending out a certain type of clients, and then we didn't have enough resource inside the leasing office to go through the process. So we kind of mapped out someone comes through the door, how many minutes to grid, then the walk, when they come back, how they fill in, right? And do we have a tablet or somebody else? One of the interesting data point was it was taking almost 40 minutes to fill out an application, and then we didn't have stuff. So we staffed it. We bought 2 iPads. Now you can apply in 5 minutes. Issue that, so our conversion went up all of a sudden once we did the work, and bringing the same amount of traffic, our application went up, our conversion trickled in. That was the first part of the data. Second thing, once you fix that, we have the double digits here, double digits there, and then we saw that the leads that coming in, they're not enough for the pace that we want to go up, right? We want to go from 85 to 92 before the Christmas. So we have literally 60 days. About 10 days or so. So we brought back in, then we went back and brought in a specialty marketing team, and they are specializing of bringing leads from Facebook and some of the other component, excluding of Zillows of apartment.com. And then we went to that and kind of role played that, hey, if my stuff can handle 20, if I bring in another 20 on top of that, can I handle it? But those are the asset manager type work. And now we are pacing to be 93 in about 17, 18, like mid next month. We should have, in a pre-lease perspective, we have a 93% already. So those are the things that we do at the asset manager level. Those are not the property management level type work, those asset managers. So that's where we spend most of our time.
And one other thing, it's obviously very fluid too, depending on where you are, right?
Yes,
So
yes.
on takeover deep value, like I know in McAllen, we were turning 30 units a month. And that's a huge focus, right? Because if the apartments aren't ready to rent, none of this makes any sense. None of this matters. So the evolution of a project, right? So it's getting it rent ready, it's getting all the CapEx done at the beginning. It's very heavy, that type of work. And then once those units are ready, you better have tenants ready to move into them so you can continue to execute the plan. And then as you stabilize, of course, it's how far can we push the rents? What can we do? Do we do the next level of upgrade? And that's what a good asset manager is always doing, right? Always playing with the lever, saying, if we go up one more notch, can we get another 50 or $100? And then what is the math, right? If it's going to cost you $5,000 to get $20, may not be worth it. It's going to cost you $5,000 to get $250. It's clearly worth it because you can multiply that over. So again, and Tracy had asked the sort of the general daily task, but I'm not sure there's metrics that they measure all the time, correct? Like they're always looking, you're looking backwards, you're looking at now, and you're looking forward. What leases are coming up? What do I need to do? What units need to get turned? And
So,
it's very fluid.
So I can help with that one. So Trevor, you're right. So I'm gonna go back a little bit, show you an example of what Trevor was talking about, and then I'll touch and traces your question, what we think is there, right? So let's say, if you think about it, running at a very simplistic term, it's not as simple, but a very simplistic term, we run a business, right? You heard me saying it that apartments are buying a business. So in buying a business, you have 3 major components where customer has to walk in through the door. Then the sales team needs to know how to sell the product. And then on the back office, you got to have inventory to sell it. That means I have to have units to rent. And my front office, leasing office needs to know how to convert. And then my marketing team needs to put the people in. It's simple, but it's not that simple, right? But on a simplistic term, We showed you McCollum there. That's one of the things that we had inventory. We didn't know how to sell. Then we figured out we don't have enough people to sell. Then we figured out customer was taking too long of a line, so we brought in more salespeople, right? And we brought in more kiosks to get that improved. On the flip side, I'll give you an example. Warner Robins in the portfolio, early on, we sold quite a bit. And then something happened to the rehab crew. We could not get enough units out the door. So what happened over time, for about 2 months or so, we go back in and see we don't have enough product to sell. I don't have enough units to rent out because they're not ready, and my sales team cannot sell. So we slowed down the marketing very intentionally, right? So this kind of a thing needs to be not reactive, more proactive. It's not like, oops, my rent is coming, my lease not happening. Let's see what I can do. That's reactive. And asset manager should be proactive, saying, look, I have the data. I'm looking at it. I'm looking at 2 months out. I am preparing for it. That's the data, right? Not everybody has the data. Do what we take a look at it. That's interesting. But this is our advantage as you go. Back to the daily task. So daily task, most of the time you run your own data, and you understand you tend to optimize different properties for different things, and you kind of take a look at that way. And a slew of things that will happen. So biggest thing is that we have the asset manager calls, we have the property manager calls, preparation for those two. You look at it, and then you figure out things that's supposed to get done, whether they're done or not, and that kind of stuff, right? And so there's quite a bit. There's no daily task. That will depend on the properties, depends on the assets. For massive side, where we at typically, every 75 to $100 million worth of assets, we'll have a dedicated finance manager. That's your junior asset manager. And then we have a portfolio managers that can go, depending on the asset type, to up to 200 million. So that's how we built the team. So last year when we built the team, Q1 and Q2, we assumed the team can handle 75 million. Then we built the team for 150 million. Now we built a team that can take $1 billion, almost $500 million worth of assets as you go. So every 75 to $100 million, we have one Bhaskar. They live and breathe the P&Ls, everything. So he looks at Pasadena and McCollum. That's about 20 and a 60, 80, $75 million. Then he's helping out with some of the Georgia market. So he looks at those P&L, he's living in, he's breathing in, he's asking questions to the accountants, he's looking at the way we're supposed to take a look at it. But his view of the world gets set by me and Sanjay. We talk about it. Hey, this is what where that bottleneck is. So let's go after that. Let's solve for that. So that's how we manage. So 75 to 100 full-time finance manager, then up to about 200 to $250 million one portfolio manager. That's where me and Sanjay come in. Scott has a land in development complex. Okay, perfect. So Scott is easy. Trevor already replied. Deals at massive.capital. Once you send the email, it goes to Bindia, Bhaskar, and us three. Us four principals. So they will. Sorry, we also have Ellen. I forgot to bring her in. We have a full-time underwriter, Ellen. She joined us on the 15th, and so the email goes to Ellen. I'm sorry, I'll update the deck right after this call. So Ellen, Bhaskar, and Bindia, they will take a look at it. Ellen's going to do a first pass based on her feedback, and we dig deeper into it. So as Scott, please send an email out to deals@massive.capital. Let us know what you're thinking and all the information that you have and what you want us to do. We'll take a look at it and revert it back to you within 2 to 2.5 days.
And someone asked about Los Angeles and Atlanta. So we only do business in pro-business, pro-landlord states that people are moving to. So I'm sorry if you live in Los Angeles, but you're not included in there, but definitely we love the Georgia market.
Hey, love Atlanta market. Sorry, we love Atlanta market. We're there. Trevor is right. But one day we'll get into New York and LA market. Not today. We're going to hold up for a little bit. Bria asked, maybe share some common weight as mentioned. So, okay. If I have to simplify it, multifamily to revenue game, or usually a business is a revenue game. It's never been a game of cost. When you underwrite it, we don't have to be cost perfect. We can get there by cutting cost. That's the way it's not going to work. So it's a revenue game. So start with the revenue. And on the revenue side is price times the quantity, right? So price is the market rent, whatever we have, and quantity is how many units that we can sell. Within the quantity, if you break it down, then it becomes your rehab quality type that we have, right? And the speed of getting those things in. So supply chain becomes very important to get to the quantity. So we optimize for, a couple of things on the revenue side. Where are we going to target the potential tenants and how we are bringing them to the door, which is my course that we measure. Second thing, we take a look, inventory count, how fast I'm getting my inventory right. We want to be in a spot where I have more that I can sell, not the other way around. It's a very tough place to be. I don't have less to sell, right? Sorry, the other way around. I want to have less to sell, not more to sell. So we shore up the inventory first, CapEx execution plan. We make sure that marketing works right. Then the property management company gets sandwiched in the middle. But our core focus is how fast I can get the units ready. And number two, how much marketing that I'm doing today so I can get people through the door. Once that happens, then we go to property management company and say, hey, where's my conversion? Is it the practice? Is it the product? Or is it the price? So once you manage the revenue, it kind of works out. And then once we settle the revenue, we go after the cost. But we don't try not to go after the cost right away. So we want to be cost efficient, really revenue maximization game. That's how we look at it.
Awesome. In theory, we're at the top of the hour. Doesn't mean we always keep going, but I just wanted to do a time check. So a couple reminders. Please join us on November the 3rd for our event. It's going to be action-packed. It's going to be a lot of information. We've got networking rooms. I suggest you spend the $49 to get the VIP access. You get all the recordings, you get everything. We have a lot of it's a very, very cool. So this is the agenda, and you can find that on our website as well. There's a lot going on.
I want to share a little bit. So for us, we did it 2 days. We felt like, it was great. More than 500 people came in, so we appreciate you guys joining. So we said we're going to test. We are one of those teams we like to test. So we compressed it down to one day. But then we said, okay, can we extend the times? I can have more session. So it is important to get the videos because we have two things, especially 9:30 till 10:30. We'll have 3 sessions that are going to go in parallel on top of the 8:30 to 9:30. So this is where an interesting part we didn't talk about here. We have Gray Steel, the CEO of Gray Steel. It's a friend of ours. He wasn't here. He was not available for this time, so he gave us one of his best guys, Jack from Dallas. So he's gonna come about and tell us what's his view of the world, Gray Steel's view of the world for the multifamily in the U.S. sector. And then we're bringing in here. We are bringing in Walker Dunlop to give us a view of the Texas. And then we are bringing in Arbor to give us a view of Dallas. We're bringing in JLL to give us a view of Houston. So we hit 2 big MSAs and a Texas and a US focus. So if you want to know what the big shops say, come stop by, listen to them. And those all 3 are parallel. We didn't have enough time, so sorry. If you want to get the videos, and then we have the investors portal where we talk about retirement, the tax strategy. Then this one here, I'm bringing in 3 big shops. We have Elevate coming in, we have Market Space coming in, and we have R1s coming in. So one of the interesting part, we said, look, if I can bring in anybody that owns at least more than $200 million worth of asset for a while, and then we end up having Market Space, they own like almost $2 billion, and then Elevate is hitting around $1 billion. Then Realty One with us around $500 million. So it's gonna be interesting view of the world from them. We have a great set of panelists here. They all went from 0 to apartment owner while having W2, just like me, and all of us here. So we have really cool, interesting process as you kind of go through. So we have triple net assets here. We'll talk about the lease up on the retail space. We do quite a bit of retail. We don't talk about that enough. And typically retail is not a syndicating type model. That's because of the loan requirements. Those are recourse loans, and recourse loans are not everybody wants to sign in, right? So that has a natural barrier to entry. We don't talk enough about it. So we thought it's going to be really cool to understand how having access to the triple net assets, it's important. That's because we're not competing on a price. We are competing on skill set. And then when we have She panel, that's an awesome panel, a bunch of other stuff. And this is the AI tool, 5:30 to 6:30. It's sorry, I gave you the agenda on the background of it.
Awesome.
Cool. So I'll stop sharing and open for questions. So anything.
Feel free to unmute yourselves. you have any questions? And it doesn't have to be about asset management. So once we hit the magical 7 o'clock, anything goes. Sometimes we even turn the recording off. I think we'll do
I have a
that.
question on the Q&A. How are there so many responsibilities for the contract?